Hey Samfab, today we are going to discuss about case scenarios, and first we'll move on with our first case scenario. Is don't read it like a story, all the information that they have given. You could see what they have asked for, because by the end of the day we have to find answers for the case scenario that we have got asked for. So we'll see the first case scenario. Based on the above data, advise as a tax auditor, how shall the purchase of plot at somebody they have purchased plot we dealt in tax audit report in form 3CD. They're talking about clause 29, clause 29b. What is clause 29? Clause 29 deals about the advances that were forfeited, and 29b is with regards to any purchase or sale that had happened with regards to the inadequate consideration, that were purchased any kind of property with inadequate consideration. So the information with that is here. The company had purchased a plot having stamp duty value 31 lakhs. Okay, the stamp duty value is 31 lakhs for a consideration of 30 lakhs. They have purchased for less than stamp duty value. But as per section 56 to clause 10, 110% was given as a bandwidth for that threshold limit. So 110% of consideration is 33 lakhs. Since stamp duty value is less than that, it is okay. It is you need not report, even that is allowable. So 56 to 10 is not attracted. If it is attracted, we have to show that difference amount in other income. That's it. And we'll see the options here. No reporting requirement will be arised in form 3CD. Option D is most appropriate answer. We need not report that. Form question 2, as a statutory auditor, state aggregate amount that shall be reported in clause 7 of para 3 caro 2020. What will report in clause 7 para 3 of caro 2020? All the statutory dues that were overdue more than 6 months. What are 6 months? When a 6 months threshold is would be started from 1st October, November, December, January, February, March, 6 months. All the statutory dues that were due before October has to be, and that were not paid, has to be reported here. We'll see here, this is the statutory dues, excise duty overdues, and they're saying that for that expenditure of the month would be due. The due date of that would be 5th of next month. That is August is 5th September. That would be 5th September. That is more than 6 months, which, okay, we have to report that. For September, it would be 5th October, right? It is less than 6 months or equal to 6 months. So it's not more than 6 months. So the amount of 5 lakhs that was overdue on 5th October, 5th September, sorry, 5th September has to be reported in Caro. So 5 lakhs. Option A is most appropriate answer. What amount of dues of trade payable shall be separately disclosed? How the trade payables have to be disclosed as per Division 1 balance sheet of Schedule 3 were trade payables that are outstanding dues of micro and small enterprises. Make a note that do not include medium enterprises, only micro and small, not medium enterprises, and outstanding dues of other than micro and small enterprises. We'll see the relevant data here. The trade payables consist of micro enterprises 60 CR, medium enterprise we include that in B, others. Small enterprise is 45 CR. In A category, we include these two, 105 CR, and other 50 and 40, this is 90 CR. We'll see the options here, not more than 6. Yeah, micro and small with regards to trade payables, option B is most appropriate answer. And we'll see fourth one, based on the above data, advise as a tax auditor, how reporting under clause 26. Clause 26 reports what? Section 43B. What is section 43B? All the expenses that were incurred in a financial year have to be paid or make payment before the due date of ROI or before the submission of a return of income. If not, it would be allowed in the year in which it had been paid. So as per clause 26, they are talking about 26A, B, A, B, 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 A. We'll see that. Clause 26B, A is all the pre-existed expenditure, that was expenses with regards to the previous year, have paid during the current year. We have to report that amount here. And all the pre-existed expenditure that were existed in the previous existed were not paid even in the current year had to be reported here. and all the expenses during the current year paid before 139.1, that is before submission of return of income. So we have to report it here, and not paid before 139.1, we have to report it here. And we'll see what the 14 lakhs is. This 14 lakhs is with regards to excise duty, right? The excise duty is here. 5,342. Every amount was paid on 5/6/2021. That was before submission or before due date of return of income. So all the 14 lakhs have to be done during the year and paid before 26 BA. That is option D is most appropriate answer. We'll move to the second. Hello, mic testing. 1, 2, 3. Now we'll move on and see the second case scenario. Where in second case scenario, this is a PQR Limited is a subsidiary of GDP Limited, where in GDP Limited the total shareholding is 19% by Puducherry government and 19% by Delhi government and 13.5% by Gujarat government. That is in total 51.5%. It's a government company, because in government company at least 51 more than or equal to 51% have to be a government shareholding. Since GDP Limited is a government company, its subsidiary PQR Limited is also a government company. And with that said, first we'll see the first question. To whom should Mr. JJ informed about the resignation? You see, audit of a government company has to be said to whom? He had to say to the company, he had to say to the registrar and then C&AG also, because it's a government company. So he has to check if he had not done so with regards to non-compliance, what's the implication? Minimum 50K plus remuneration, whichever is lower. For a 500 per day, for maximum 2 lakhs is for continuous failure. Since we'll see his remuneration, his remuneration is 45,000. So 50,000 or his remuneration, whichever is lower. So option D is most appropriate answer. The registrar C&AG, and also as a consequence of his failure, he has to do a fine of 45,000. Option D is most appropriate. Second thing, with respect to the of Mr. F, what Mr. F had done? Mr. F had borrowed a sum of 3.89 lakhs and purchased 1.09 lakhs in ordinary course of business at arm's length price. You need not consider this. This 3.89 lakhs is something to think about it. As per section 141(3)(d), auditor, his partner or his relative who had indebted to the company more than 5 lakhs. This is Mr. F had borrowed 3.89 lakhs, so it's within the limit, so we need not, there's no implication with that. So the appointment is valid as it doesn't exceed the prescribed limit. It is within the prescribed limits. And which of the following is permitted as per chartered accountant? Charging fee on percentage basis not allowed. Select and recruit personnel and conduct training allowed. Mr. One of the partner is responsible to sign was into teaching profession. Yes, general permission was given that he could teach for 25 hours a week. Has given it. So 2 and 3 was the most appropriate answer, which the respect to the fees to be charged with new assignment. What's a new assignment here? XYZ Cooperative Societies Act. Okay, it's a cooperative society, can be opted to charge fees at the percentage base. Yes, as per clause 10 part 1 first schedule, they could for a cooperative societies fee could be charged with respect to as a percentage of the paid up share capital or net profits, and a fees of 101. Yes, the minimum fees requirement is actually not mandatory, it's a recommendatory in nature, so he could do that. Both 1 and 2, either 1 and 2. Option C is most appropriate answer. Among the below transaction which is undertaken by PQR, which needs to be reported under physical loss. Okay. Okay, they have taken 10 CR loan and exceeding the limit of 269 SS. This has to be reported under clause 31A, but since PQR Limited is a government company, they need not report that. Change in method of accounting, they have to report. Repayment, that is, they have to report it in clause 31C with regards to 269T repayment, but since it's a government company, it need not report the same. And with regards to the closing stock, clause 40, it has to report. So 2 and 4 was the things they have to report. Option B is the most appropriate answer. Now we'll see the case scenario 3. Under case scenario 3, the company had obtained a license from central government to promote in sports of hockey in rural areas. So it's a Section 8 company. Its objective is to promote sports in the country. So this is a Section 8 company, clear Section 8 company. We'll see the first question, case scenario 3. Reporting under CARO 2020, no. CARO is not applicable for a Section 8 company, right? So yes, CARO 2020 is not applicable to this company. So option B is most appropriate answer. And what's the total amount of loans that should be classified as NPA by KD Bank? Okay. With regards to the KD Bank here, the loans that had given, yeah. During the audit of KD Bank, they have given 59 agricultural loans which were guaranteed by Delhi government, and they have been overdue for more than 2 years. So since it's backed up by state government, would be treated as NPA. But if it is backed by central government, it is not treated as NPA. So here the government of India, the 73 loans, that is amount of 25 lakhs, was not an NPA. So first thing, 29 lakhs, and 6 corporate loans, 3 from government of India and 3 from Delhi. So 25 lakhs for each company, 25 lakhs into government of Delhi, that company 3, 25 into 3, 75 lakhs. The above here, it's 29 lakhs, 75 lakhs has to be treated as NPA. Yeah, 29 lakhs plus 75 is 104 lakhs. Yeah, option D is most appropriate answer. And we'll see third one. Which among the following has to be reported by auditor as a contingent liabilities? Any guarantees that were given is a contingent liability. Yes, option A is most appropriate. And percentage of total bills purchased. Bills purchased is not a contingent liability. It's a liability. Claims taken under the bank acknowledged as debt, as it had already been acknowledged as debt. It's not a contingent liability. It's a liability. Unpaid salary for which it's undergoing a court trial. In order to have that, it is currently undergoing a court trial, right? It's not a contingent liability because we have to pay for that. So it's also a debt here. So option A is most appropriate answer, contingent liability, whether it's in India or outside India, it's a contingent liability. And fourth one is as per section 701 or 701, which among these are areas should be determined as key audit matter. In order to find any key audit matter, what's the thing we have to write? Whether we have to follow three things. That is, it's a risk of material misstatement. It is regarded as a misstatement while doing, it is identified as a misstatement while doing audit under SA 315, and it includes a significant professional judgment, and it is a significant event or transaction. And we'll see the effect on the audit of significant transactions that took in place in the financial year. Yes, all the transactions and events. Option A, option 1 is a key audit matter. Areas of high risk assessed by management's expert. No auditor has to do that, so not two. And 3, auditor judgment relating to areas involve significant management judgment. All the significant audit judgment is relating to the areas. So there includes significant auditor judgment, even that's a key audit matter. 1 and 3 are key audit matters. So is option C is most appropriate answer. Whether CA had justified not accepting the services of general insurance. Why, what the general insurance had done? The general insurance has paid up share capital 113 CR, which includes preliminary expenses of 17 CR, but without including preliminary expenses, a general insurance company, whether it's a life or insurance company also, it has to be maintained minimum 100 CR as its capital, paid up share capital. Since it has 96 CR as paid up share capital, auditor, that's not a valid provisions with regards to general insurance company. For reinsurance, for reinsurers company, it has to be minimum 200 paid up share capital, 200 CR of paid up share capital. That's below 100 CR, we need not approve that. Shall exclude, yes. The company should have minimum paid up share capital. We shall exclude the preliminary. Yes, option B is most appropriate answer. Now we will see case scenario 4. In case scenario 4, it is a with regards to Statutory auditor of Samrat Limited identified the aggregate amount which shall be reported under clause 9 of para 3 Caro 2020 for utilization of term loan and all. We'll see here. See, where they have taken loan of 20 CR, 10 CR for development and construction of expenditure other than land, and 10 CR for repayment of unsecured loans to promoters, etc. The company utilized that. How? It purchased land, but it is out of purpose. They have taken 10 CR loan for other than land cost, so they should not use that for land. So this 4 CR has to be reported, and the development of construction expenditure is they have taken for that 10 CR only, but they have expended 11 CR for that. So 1 CR, that is 11 minus 1 CR, has to be reported. And repayment of unsecured loan to promoters 3 CR. Okay, that's within the limit of 10 CR that had taken. Investment is again a purpose breach. So they have to report this 2 CR also. In total, they have to report 7 CR. Yeah, option C is 7 CR. They have to report under clause 9 as they have transferred the purpose for that. As an audit manager of the firm, advances shall be classified as a non-performing asset. There were those advances here. The advances that were guaranteed by state government, which was overdue since November 2021. You see, that's 4 months. That's more than 3 months. If it had been overdue for more than 90 days, it's a NPA. Since it is guaranteed by state government, no provisions of non-applicability of NPA would be applied. So it would be treated as an NPA. This advance is treated as an NPA. If it is backed by central government, it's not an NPA. It's in state, it's an NPA. And the ad hoc limit was not reviewed for 120 days. If it is that ad hoc limits were older than 180 days, then it would have been an NPA or stock statements. So since it's 120 days, it's not an NPA. So Mr. X advances an NPA. Option A is more right. So we have to check the rotation of auditors. When the company is a listed entity, rotation of auditors is applicable. When it's an unlisted public company, then if paid up share capital touches 10 CR, rotation is applicable. If it's a private company, when it touches paid up share capital 50 CR, rotation is applicable. For all the other entities, if the borrowings touches 50 CR, then rotation of auditors is applicable. For Samrat Limited, Samrat Limited is actually an unlisted company that comes under last category since its total borrowings more than 50 CR. Since 50 CR, that is 60 CR here. Rotation of auditors is applicable. Yes, rotation is auditors applicable when total borrowings exceed 50 CR. Option C is most appropriate answer. And the general insurance company were maintaining solvency ratio or not. For what's the formula for solvency ratio? That is assets more than or equal to 150% of liabilities. We'll see here assets 700 CR into 150% of 415 CR is 622.5. So assets were more than that 1.5 into 415 CR, that's liabilities. So it's maintaining solvency margin. Yes, solvency margin is being maintained. Option A is most appropriate answer. And Mr. P is acting as a surveyor and loss assessor in. Was that a violation in clause 11 part 1 first schedule of the professional ethics? No, the general permission was given like for valuation or for inspection of examination papers and etc. A general was given, so it's not a breach. A general permission has been given. 4.5 is option B is most appropriate answer. Identify the type of reinsurance contract between Royal and ABC Insurance Company where they have transferred the risk of only fire. Only fire is only a not whole risk. The whole risk was not transferred. If it's a whole risk transfer, it's a treaty. Since only fire, it was a facultative reinsurance. So it's option D is most appropriate answer. AK and Co, the chartered accountants were right, not including report on Coro in the statutory auditors report. Yes, they are auditing an insurance company, right? They are auditing insurance company, Royal General Insurance. So they are right. As Coro is not applicable to an insurance company, option A is most appropriate answer. Now we'll see fifth MCQ here and fifth case scenario here. Regards to first question, what should be Mr. Bajaj's audit plan regarding checking direct entity and indirect entity level controls? What's the management advice they have given? The management have decided that, discussed that, whistleblowing policy, HR policy, these were all what these are. These are direct entity controls. Bajaj told the audit team to rely on information provided by them and entity levels control without any second thought. The management advised auditor not to waste time in checking direct entity level controls. They are putting a restriction on scope. You see, the auditor also have to check the internal controls of the entity, whether it's direct internal controls or indirect internal controls. So they are putting a restriction on scope. This should not be encouraged. So we'll see the options here. Mr. Bajaj should check direct internal control, skip. No, he cannot skip. Yeah, should evaluate both direct level and indirect entity controls. Option C is most appropriate answer. Is this company justified in holding meetings of audit committee and risk management committee twice in the financial year? Risk management committee, it should hold at least once meeting in the financial year, but audit committee shall hold at least 4 times. 2 times is not uh, recommendatory. It has to do 4 times and 1 time without management plus auditor. And it should also invite auditor and ask his comments on that. And no, not justified. Holding 2 meetings. Audit committee should be meet at least 4 years, and risk management can meet once in a year. Okay, the audit committee, the company is not justified in holding 2 minutes audit committee. It should meet at least 4 times. However, the company is justified in holding 2 meetings of risk management. Here comes the at least part, at least one meeting, but more than one time also it could meet. So option C is more appropriate answer. With respect to the meetings of audit committee attended by Mr. Bajaj, what are all the rights he can be exercised? Right to be heard, yes, he has right to heard and not right to vote. Auditor do not have right to vote there. Bajaj has right to vote, and when it considers no right to vote, and have right to be heard and to vote, no right to heard, right to vote there. Bajaj has right to be heard in the meeting of audit committee when it considers, but shall not have a right to vote. Option D is most appropriate answer. Make it a big point here. It's a repeated question there. It's a repeated question that auditor do not have right to vote in audit committee meeting. With respect to the annual remuneration by PNG, is the company correct not obtaining share approval from special resolution? We'll see what that was. Yeah, here it is. Board of Directors. One of its non-executive directors' remuneration exceeds 10% of total remuneration of all non-executive directors. The company did not obtain special resolution. When the company should obtain special resolution? When remuneration of one non-executive director is more than 50% of remuneration of all other non-executive directors. That is here. At this stage they have to obtain special resolution, not more than there, so the special resolution is not required here. The company is correct not obtaining approval by shareholder through as no such approval is required in this case. Option B is most appropriate answer. They don't require to take a special resolution. What is the responsibility of Bajaj with management decision, discussion and analysis report is concerned? Mr. Auditor should verify and comment. He need not verify that. He should review all that statements. He has to review the compliance with and need not verify the facts and all related to non-financial information reflected in management discussion and analysis report. Yes, as per audit corporate governance, he has to check whether they have fulfilled the requirement of the management discussion and all. Who should verify? The audit committee should verify that. Management discussion analysis report. Auditor went to verify the financial statements. So option C is most appropriate answer. Audit committee should verify management discussion and analysis report. Auditor should review management discussion and analysis report. What is 6.1? What should Mr. Bajaj also do with respect to management request in auditor regarding mentioning company's future viability? No auditor could comment on the going concern basis, not on the future viability of the company. So we'll see here, as auditor obtains reasonable assurance only. Mr. Bajaj can mention about companies, cannot mention. Can mention about future viability, no. Cannot mention about future viability. And its compliance certificate, or auditor report, as both the documents are not assurance as to future viability of the entity. Option C is the most appropriate answer. We'll move on to the sixth case scenario. Okay, first we'll dive into the questions here. Whether the understanding of CA Sita regarding their right and duty to attend general meeting is correct. What did she thought? Had decided not to attend the meeting by herself and send CA Rohan. Okay. Yes. CA auditor has right to receive notice for the general meeting. With the right, there comes a duty to attend the general meeting. But what do Sita can do? Sita can do send an authorized representative. Further, is she correct not attending general meeting? Yes. She could also send her authorized representative also. So Sita is correct, has right to receive. However, there is not an under any obligation. No, there isn't a duty for Sita to attend the meeting. Not correct. No, Sita is correct, as auditors have right to receive notice. However, they are not under an obligation to attend such meeting. Further, she is not correct in sending Rohan. No, she is correct in sending to attend meetings as an authorized. Have yes. Auditors have right to receive notice, and they have also duty to attend the meetings. Yes, Sita is not correct, as though the auditors have right to receive the notice of every general meeting. They should also have duty to attend such meeting. Further, she is correct in sending Mr. Rohan to attend the meeting. So option C is most appropriate answer. See the answer here? Yes, C is the answer. Yeah. Second question is, with respect to the fraud committed by the accounts officer, is there any other reporting requirement as a part of disclosures in the board report? Yes, if the fraud is for less than 1 year, it has to be reported or disclosed or disclosed in its board report. Where's that? The fraud amount does not exceed 1 year, so it has to be disclosed in the board report. The auditor has to communicate within 2 days to the board, and that has to be disclosed in board report. The CETA should report the fraud board auditor and central government. No, for central government, when the fraud amount is 1 year or more, to audit committee within 2 days from the knowledge of fraud. Yes, and which will turn into report as such fraud within 45 days. Central government doesn't come here because the fraud is less than 1 year. Should report the fraud to central government. No. So option B is most appropriate answer, where central government is not at all involved. Option B is most appropriate answer. What should Sita advise the management regarding the voluntary revision of financial statement? What is voluntary revision provisions? The company cannot revision or cannot voluntarily revise its account, but if it applies to the tribunal, the company could revise previous 3 years financial statements, any of 3 previous financial statements. The tribunal approval should be also submitted to ROC. Then after that, even for that revised financial statements, the auditor should also give a revised tax audit report if it necessary. This is what all the provisions with regard to voluntary revision. And the management of Sarvodaya can revise after obtaining prior approval of tribunal, and order passed by tribunal shall be filed with register. Yes, option A is most appropriate answer. And we need not look others. With respect to the revision of financial statements and subsequent year, can Ms. Sita, as auditors, revise the tax audit report? Yes, they could revise the tax audit report. They cannot revise no, cannot revise no, can revise, and should specify the reason for such revision. Yes, option C is most appropriate answer, not at their discretion. They should give reasons for that. And if is the management correct, is our entity correct in not transferring any percentage of profits to the reserves before it declares interim dividend? Yes. Even after the audit also, in few balance sheets we find P&L debit balance, in P&L credit balance, right? So it's not mandatory, it's at the discretion of the management. So the management is correct not transferring as a percent to reserves, as it is an optional. Yes, option A is most appropriate answer. Is the condition of the management correct not transferring the amount of dividend declared to a separate bank account? You see, management after declaring the dividend, management has to transfer it to a separate scheduled bank account, right, within 5 days. You see, this is what all the time limits with regards to the declaration of dividend. After dividend is declared, within 5 days, it has to deposit in scheduled bank account, and after that, within 30 days, they have to pay. If it is claimed, they have to pay within 30 days. If it's not paid, even though the dividend was claimed, 2 years of imprisonment plus 1,000 per day penalty for 2 officers in default, and 18% of simple interest has to be paid by the company. And if the dividend was unclaimed within less than 30 days after the expiry of this 30 days, unpaid dividend, it should be transferred to unpaid dividend account. If it is not transferred to this account, they have to pay 12% per annum interest. And from such unclaimed, within 90 days, they have to publish the list of the shareholders which was unclaimed dividend within 90 days in the website. So with regards to this, they have to file, yeah, management is not correct as such, have to be transferred to separate bank account in declaration of final dividend as well as interim dividend. Dividend also includes interim dividend. Within 5 days, they have to transfer to separate bank account. Option D is most appropriate. With respect to non-provision of income tax liability by company, what course of action should Ms. Sita and should do? Okay, I think they have not created any provision for the income tax liability that has to be paid. What do they have to do? It's Mr. Sita Gita should qualify the audit report, yes, for such non-provision satisfied as it hampers true and fair view of the state of company affairs of the company. Yes, auditor has to form an opinion whether the financial statements were true or not. Since they have not created the provision for income tax liability, so it would hamper the true and fair view. So option A is most appropriate answer. Here also they have given another option that it leads to overstatement of current liabilities and provisions of the balance sheet. We have to write which is most inclined or most close towards our responsibilities. What is the responsibility of the auditor? To obtain sufficient appropriate audit evidence to form an opinion that the financial statements were free from material misstatement, whether due to fraud or error, and exhibit a true and fair view. So it is most closely inclined towards responsibility. So we have choose this option as a most appropriate answer, and the answer would also be the same here at yes. They also have said the same thing here. Now we'll move on to seventh case scenario here, where they have asked whether the letter of comfort given to banks by the target company needs to be reviewed as a part of financial due diligence. Choose the correct reasons below. Due diligence. Why due diligence was mostly done? Due diligence was done by the incoming partners or the acquirers of the company, right? So the scope under the due diligence is very vast and it goes with the details. So letter of comfort also includes it's also included. So as the objective of due diligence exercise will be look specifically for any hidden liabilities, yes, or overvalued assets as they were owning the company or becoming a part of that company. Since letter of comfort given to banks is a hidden liability, it should be reviewed. Option A is most appropriate answer. And among which of the following is not a matter included in the full-fledged financial due diligence? Okay, cash flow, it was in financial due diligence, it was included. It's a part of financial statements. Accounting policies, yes. A brief history of target and background of its promoters obviously included. Accounting information system is not included in the financial due diligence. Isn't it was included in technological due diligence, etc. If it all they have connect that such. Option D is most appropriate answer. Which among the following is not an instance of where the central government may order an investigation into affairs of the company under Section 210, where we have to bring the provisions from Companies Act. Mostly you would see it in law, right? On when the central government may order for investigation in the affairs of the company when it had got received any report from the registrar or special resolution from the company shareholders and or tribunal order or a public interest. So we'll see which it cannot do that. Creditors, no, not creditors. It cannot do investigation with the correct option is most appropriate answer. Receipt from report of registrar special resolution by company public interest. As in all these instances, the central government may investigate. Can the company held assistance of experts? Yes, the auditors can do take experts of the auditor experts, right? Like engineers, lawyers, etc. For a comprehensive and a full proof examination of documents and information, yes, auditors could take assistance of the experts. Option A is most appropriate answer. Here in essay, they have said that in essay 220, there's a separate paragraph for using of experts' assistance for investigation. No, SC 620 deals with only audit of financial statements, not investigation. Investigation was done mostly as per Companies Act. What should be the procedure of Bhuv and Co. to seek evidence from outside India for investigation? When we have to seek evidence from outside India, what we auditors have to do, or a registrar, what he has to do. As per law, we have found this as a procedure, right? Where first the auditor has to go to the court, and then court, after knowing it's a reliable reason or a reasonable basis that information is outside India, it then communicates to that court in the foreign country, and then the foreign country gives the information to this court, and this court gives us to us like a registrar. Now here, like an inspector under investigation, so here also the same. Seeking evidence from outside India for investment shares of outside India is out of scope. No, an application is to be made for competent court in the India by the inspector, and as such court may issue a letter of request to a court in such country, that foreign company, for seeking evidence. This is most appropriate answer. Electronic mail, SFIO does not require for the. Now we'll move on to the eighth question here. Yeah, eighth question. They're saying select the best course of action to ensure compliance of Section 177. What is Section 177 Audit Committee? In relation with establishing vigilance mechanism, whether directors' employees can report genuine concerns or not. ABC is a listed entity. Is that so? ABC is a top 500 listed entity. Yes, for the listed entity, they have to put vigilance mechanism, and audit committee also provisions also applicable. So option A, therefore ABC is a listed company, is required to establish vigilance mechanisms. Most appropriate answer. And second one is the board of directors would like to appoint Mr. B a chairperson of ABC. Who is Mr. B? Mr. B is son of Mr. A, where Mr. A is the promoter and CEO. That is, Mr. B is relevant for that promoter. But since it's a only top 500 listed companies, it's under top 500 listed companies, with regards to the provisions that the chairperson has to be not related was not there. That was an amendment that had happened in the previous attempt. So Mr. B, even though he is related party, is eligible to be appointed as a chairperson. Option A is most right answer, but you find it here it's not eligible, as it is not as per latest amendments. I have to make a note out of it. And ABC Limited had not conducted any meeting of a stakeholders relationship committee. No, they have to be met at least once. So at least one meeting should be there, and no disclosure provided in annual report. There should be a disclosure with regards to the complaints that were raised and the complaints that were solved, pendings. And is it compliance with LODR regulations? No, they were not in compliance. Shall meet at least 1 year. Therefore, this non-compliance of LODR option A. Option A is most appropriate answer. We'll move on into the ninth question and see the first question with regards to that. The engagement partner has requested you to comment upon the usage of work of internal auditor by engagement team in accordance with as per standards on auditing. So we'll see who is the internal auditor here. Yes, we could use the work of the internal auditor, but we have to also check his competence, right? Internal auditors and the company complied with delegating duties to an employee. An employee could be an internal auditor for the company who joined the company as a first year architect, but he's not having a proper kind of expertise, or he's a latest or a fresher, right? So we cannot rely on his work entirely. So see the options here. The work done by auditor is marvelously designed and performed. As the work is highly appreciated by board of directors, we need not have appreciation of board. We want his competence. The work need to be assessed for sufficiency and should be used avoid for any double work. The auditor team need to reduce the unnecessary work. The auditor is required to assess the competence. Yes, here comes our key point: competence and professional care. And thus, the auditor needs to reconsider the audit strategy and cannot use the work of the internal auditor. Yes, option C is most appropriate answer because he's just a first year architect. We'll see the answer here. Yes, they're also talking about that. And second question is the trainee asks whether the audit team is to perform any procedures over the investment of Divas Swaroop Private Limited. What is that company? Divas Swaroop Private Limited is in it's been a subsidiary for this company by investing 45% in share capital, and the company is having 100% control over its board of directors. So it's a subsidiary of this Andy and Co Limited, of this company that they were auditing, like Manava Swaroop Limited. So Manava M is a holding company, and D is a subsidiary company. So he also have to audit the D limit, the subsidiary also, because it's mostly like a material subsidiary here. The trainee asked whether the audit team has to perform any audit for over investment in Divers Swaroop Private Limited. Yes, they have to also do audit procedure with regards to the investment that the Manava Swaroop, that was a company, the holding company is made. So the company needs to prepare CFS statement, and the same has to be audited by the auditor and needs to consider the financial information. Yes, the auditor needs to perform audit procedures over the balances in the investment, as these were also a significant class of transactions, and which where it's a account balance where the users of the financial statements have a specific attention. So they have auditor has to put some audit process. So A and B was correct. Auditor need not perform any process. No. Option D both A and B. Option D is most appropriate answer. The trainee asked about the role of the auditor in case of investment in its subsidiary had increased to 60%. That is 45 to 60%. That is 15% increase. The auditor need not do any additional procedures compared to this year, except for additional procedures over the investment value and its disclosures in financial statements. Yes, all the audit process that he had in this year, he could do that. And all the in audit procedures only with regards to the increased investment value he has to do. All the audit procedure that he had done in current year should be copy paste for the next year also, even if that was 60%. That is because there's a catch here, is because we have regarded it as a subsidy. The ICA would be thinking that it's with not regarded as a subsidy, that because with it's 45% only, but we have already thought it is a subsidiary. Why? Because it had 100% chair in board of directors, so control is there, so we regarded that as a subsidiary from starting itself. So that's why a question was asked with regards to that. Since it is subsidiary previously in this year and the next year, even if the share capital was 60%, so all the audit procedures would remain the same. So option A is most appropriate answer. And D is the trainee asked you whether the Ind AS is applicable to the group or not. Yes, it is applicable to the group. Since it's a listed entity, this M Limited, the holding company is a listed entity, right? A listed entity has to, where is it? The companies are listed in stock exchange, whether in India or outside India. If it's a listed entity and it's in process of the listing in Indian stock exchange, it's a listed entity, so Ind AS is applicable, but only limited to prepare its financial statement as per Companies Act. No, if that Ind AS is applicable to the group, it is also applicable to the subsidiary companies also. As a company, holding company and its subsidiaries need to prepare its financial statement as per Ind AS rules. Option B is most appropriate answer. Now we'll move on to the 10th question here. 10th question. First one. With respect to the non-consolidation of financial statement of Soccer Limited with the financial statements of D Limited, how would the auditor deal with the same in the audit report? You see, non-consolidation of a subsidiary is material and pervasive. How do we know that whether a matter is pervasive or not? Pervasive is something that affects more than one or more than two or more than account classes of transactions or account balances. Since a subsidiary could affect a more a lot of account balances, it's a pervasive thing, and it's also material thing, because sub, uh, consolidation of a subsidiary is a material aspect, and since it is with regards to the financial statements, the auditor has to give an adverse opinion. Disclaimer of opinion is when with regards to the internal controls. If it is not, if it's either material or pervasive, they could give a qualified opinion. Since it's material and pervasive and it's with regards to the financial statements, the auditor should give an adverse opinion. Yes, option B is an adverse opinion. It's most appropriate answer. With respect to the corresponding figures of the financial statements in the current year financial statement, what are the auditor's reporting responsibility for the same? What's the difference between corresponding and comparative financial statements? This was also mentioned in our keyword cut series, right? Do check that out. It was more detailed in that. Corresponding is like comparison of sales of Q1 to Q1 of some other period like previous year. like comparison of sales from summer to the summer only, not for the sale with regards to the winter. Where comparative information is comparison of a particular period with regards to different years, like 2020 sales to 2021 sales, like that. And that is what with regards to corresponding and comparative figures, the author's opinion should be refer to each period on the financial statements for present. No, with regards to corresponding figures, what he has to do, he has to has no obligation with regards to the previous audit period. The auditor need to report on the current year financial statements only, whether it's for comparative or corresponding. No, the auditor opinion shall not refer to corresponding figures except in previous period audit report, other than unqualified opinion, or the auditor has a sufficient evidence that the material misstatement exists in the financial statement in the prior period, which was not addressed earlier. So the auditor has to not refer those corresponding figures that with regards to that summer or winter, except the previous period audit report has other than unqualified opinion, that is, it has a qualified opinion in the previous year. So option C is most appropriate answer. And the auditor has no reporting responsibility. No, he has a reporting responsibility with regards to the corresponding figures if it has a qualified opinion. And option on question 3 is, what is the reporting responsibility of the auditor in case the prior period financial statements were not audited? If it's the first time the audit for either for the entity or for the auditor with regards to the entity, what is his responsibility? The auditor need to report on matters in key audit matters paragraph in his report. No, if as it is not audited, what he has to do? He has to either the auditor need to give a report on the matter in the other matter paragraphs. Yes, key audit matters is something where the all the information that was discussed between auditor plus the management or the TCWG, as this was something that was not discussed between the management, as it's a fact that the previous financial statements were not audited. The auditor needs to report such statement in other matters paragraph. Yes, the other information other than financial information. The auditor will be responsible for obtaining sufficient and appropriate audit evidence with regards to opening balances. As per SA 510, he has to obtain audit evidence with regards to opening balance also, as he has to conduct audit as per SC's accounting standards. So option D, both B and C is the most appropriate answer. And fourth one is, preparing the financial statement in accordance with AFRF is responsibility of management. Yes, which of the following is correct with regards to the disclosure of such management responsibility? This is implied responsibility of management. It's presumed that it's in audit of financial statements and therefore need not be specifically mentioned. No, they have to specifically mention the management responsibility in the engagement letter, as we see it in a 200 series. All the responsibilities of the management, all the responsibilities of the auditor, they have to clearly mention that. And the management may undertake to accept the responsibility in an engagement letter itself. No, the auditor report should describe the management responsibility in a section where the heading of responsibility of management for financial statement. Yes, both were right, but with regards to, as we are in a phase of 700 series, right, this is with regards to 200 series. In 700 series, this is the most appropriate answer. Even in the engagement letter, we have responsibility of the management, but they are saying the word itself here that in nowhere we will mention the responsibility of the management, but we do mention that in the audit report also, the responsibility of the management. And option C is most appropriate answer. If the auditor of D Limited decides to give a qualified or adverse opinion in current year financial statements with the non-consolidation of Soccer Limited, which of the following is true with regards to EOM paragraph? If he gives the adverse opinion, what do he have to give? He have to not qualify that. Hey Sampham, this is Ria from Samaya. And how are you all doing? How is your preparation going on? And we have reached to our last month for May 2023 examination. This is the month where we have to put a lot of attention and a bit more effort with regards to audit, because audit is mostly a theoretical subject. which however the audit question paper comes, it always tends to be difficult for us as a normal student as we do. So how to overcome that? You see, even if you have read the audit way long back, as time progresses, when you don't revise it in this last month, you tend to forget. So what you have to do, you have to put some extra effort or extra attention and devote some extra time to audit so that it doesn't hold you back for clearing the exam. So comes our favorite part where we start our serious preparation. You see, on fourth, we'll see time limits, monetary limits, and board limits for CA final. Time limits is all time limits in CA audit syllabus. Monetary limits, all the numerics or something that you have to remember in the audit syllabus, and board limits with regards to the compositions of the board and all, etc. These are the things. 4 and 5 will see that. And from 6 to 20, this is a vital period where we'll be starting our new series, How to Write Audit Answers, chapter wise. We'll do that simultaneously for both CA Final and CA Inter. What's our main objective of this series is to form an outline of the audit. And we're thankful that the audit has a few little bit scenarios or few cases where we could figure out the how the auditor has to respond or what the management has to do. And there were few limited behavior. The audit is mostly like a behavioral science, how the audit has to respond and how the management has to perform its responsibility and all. It all regards with that, and a few kind of applicabilities or something that we have to remember. That's for sure. That happens in every kind of chapter or every kind of subject or paper. So does audit also had that, and we are going to figure out how to frame or how to write the audit answers with minimal effort. I think we have also introduced such kind of things with our keyword kit series, right? We have found few scenarios where we could outline our answers and how to write that in the examination. So it would be a most some improved version of this. The 6 to 20 series or 6 to 20 series, How to Write Audit series, is the improved version of the keyword kit series. And before starting that, you might go and check that keyword kit series also, where we will be solving few conceptual kind of what do we call conceptual clarity. We give clarities with regards to few conceptual things or topics there. We'll solve that in the keyword kit. And with regards to 6 to 20, what I request you to do is that as and when we do discuss for a particular chapter, I recommend you to do the compiler also. For the compiler, you need not devote an hour or two for a chapter. You could do or skim the compiler, right? You need not read everything, each and every word. You have to just skim and understand how the answer was written. And that's the thing that I wanted to do that. I would love to suggest you to invest 30 minutes for a chapter, not more than that. This video with regards to that chapter, how to write the audit answer, and have a basic idea of what all the categories, if you get answer with regards to this chapter, what you have to do is you just have to identify from which chapter it had come, and we'll discuss few outlines and categories on around which you have to write answers for that. We'll also discuss few important questions and frame answers for that. And that's what something we are going to do. This is something that's my dream. Like when I was a student, like you giving exams, I wish I would know this. But as a student, I cannot have I cannot devote a lot of time to the audit because audit was for 100 marks and all the FR, SMP, IDT, all the easy chapters and lengthy chapters were also 100 marks. So what do I have to do? I have to give equal amount of effort for that. And me now being an educator and a tutor here, I'm loving to express my kind of ideas or thoughts with you, and figuring out all the problems that I faced when I was a student like you with regards to audit. And that's it. This is something that we are going to plan for that. This and after that, what we will be left with? We'll be left with 10 days. Most of us tend to start our FR preparation 10 days before the examination, and few go for a 7 day, or someone who has revised FR widely, they go for 5 to 6 days. Mostly, obviously, everybody start FR preparation at this time. Now, we are planning this 10 days month before. How we are planning? 21, 22, 23. Out of this 10 days, 3 days, not full 3 days, a portion of that was devoted to audit marathon. Why? Because audit, again, as we have discussed, audit is a vast chapter. what you have to do, you have to iterate more. Iterate is something like a repetition. You have to repeat your revisions in order to in order to retain that information long, in order to retrieve fast in the examination. You have to iterate your audit preparations or iterate your audit revisions. For that, 22, 21, 22, 23 were 3 days, devoting a few hours in our day. Just keep it like 2 to 3 days mostly, through because why only 2 to 3 hours seem to be very nominal or very minimal. But I wanted to give you quality time. I don't want to come and blabber in front of you and waste your time, because it's crucial. What is crucial is time is very essential for this examination and in last month. And we also, our motto is also to give more quality for your time. We want to respect your time. That's why we want only 2 or 3 hours depending upon the chapters we are discussing there. And with that, rest of the hours you could do FR. Now see how many revisions we have done here. As we have said, we have to iterate audit revisions, right? Until here is first revision. Keep it as a first revision, whether you have read or not read. Or we have touched various topics with regards to MCQs on case scenarios, right? So let that be a first revision, or till what all you have read, let it be first revision. Or if you haven't touched the audit books also, no problem. Here in the time limits and monetary and board limits, we'll touch each and every important topics with regards to that. So you would regard it as second revision or your first revision. And with 6 to 20, it would be either your third revision or second revision. In audit marathon, it would be your fourth revision or third revision. It's this much of iterations you could retain long until. You could need not retain long. You could retain until your examination and put the topics or subject matter into your head, because that's what we do. Audit is the subject. We are auditors, right? That's what we work. That's what we do. And that's it. So it is better for us to understand the concept, because it would help in our professional life also. And with that said, happy learning. And what do I request is that do compiler at least half an hour. Anyways, we discuss important questions on how to write them in that series 6 to 10th, or from April 6th to 10th. What do I request is devote a 30 minutes time there, and do subscribe the channel. And I give my full assurance that I would upload the videos with discipline, and I would also request you to watch them with discipline and not missing a day, not missing any video, and to share it with your friends, and it would really help them, man. You see, however the audit paper comes, we tend to think it's difficult only, and we have found something that could simplify the process, right? And moreover, we don't use any mnemonics here, because something mnemonics was something to remember from out of the box or nowhere, which would confuse us more, right? Anything which we learn should simplify our problems, not to overcomplicate that or not to make us more confused. We're not using any mnemonics, and our motto is no mnemonics, and we have to type fast in the examination. While we are studying, we are going to study hall every day and sitting and studying for 10 to 12 hours a day. Why? To prepare or to give our 100%, give our best in the examination. And that's it. And that's what even our goal is also. It is for you to give marks, like not make audit hold back in clearing your group. Okay. And that's it. And happy learning, and do share it with your friends. That's an important point. And leave a like and do subscribe and watch your videos regularly, and watch the videos regularly. And that's it. Happy learning. Keep it on a lighter note. You follow the schedule, and I think it would be more than enough for your audit preparation. And you could put your more effort in other things, as we have already put so much of effort in figuring out what all the things that we have to write in our audit, right? And that's it. Happy learning. Bye.